Good morning, everyone. Welcome to this week's edition of TurnKey Trader Insider. Before we get started, I do just want to do a quick mic check. Please type a 1 in the questions box if you can hear the sound of my voice. All right, excellent. Thank you, Susanna, Kevin, Davin. Thank you guys for joining me. All right, now that I'm coming through loud and clear. So the goal of this class is for us to go over the rules and money management strategy of TurnKey Trader, any other helpful tips that can improve our trading, and most importantly, to answer your questions. I do really like to encourage any questions that have popped up as you guys have been using the system, as those can often help other people, and you may throw out a question that someone else didn't even realize should be something they should be asking, and it can really help to jumpstart their progress with TurnKey Trader. So first I have to leave my legal disclaimer up here. Basically stating, since we'll mainly be looking at historical examples, they do have limited value, but they are good for review. And past performance is not indicative of future results. That type of thing. Same standard disclaimer. Most of us have heard many times. So, all right. So let's go ahead and jump into it. Happy Friday, everyone. And of course, anytime you guys have a question, feel free to throw it out there. And if I'm in the middle of a point or something, I'll probably wait until I finish so I don't go off on any tangents. All right, a couple questions off the bat. We have one from Carl. What are the yellow borders on some of the bars? So if we have a yellow border, that basically means that if there were to be a tail on that bar, it would be a qualified gold bar, basically. So that requirement is met. We just didn't have a tail drop down and touch our orange line, which we usually need to see for our trend trades. And Davin asked, could you clarify the trend trade again? There are times when it seems like a trend trade isn't valid and others when it seems to be valid. Yeah, so if you're the trade marker, keep in mind that since it does plot after the fact, and it is by the strictest qualifications of the rules, so it will always check if a yellow line, or if our yellow line in the direction ribbon section came from an extreme before qualifying the trade. So in a case like this, I turned mine off. It just kind of, yeah, so while this one was a little bit iffy, especially when the markets are going, one of the most powerful indicators on this chart is our yellow line here. And for the trend trades, I typically like to see it come from 100 at least, or come from, in this example, negative 100, and cross up to above 60 to qualify a trend trade. So it's a bit of a different story when we have a long running established trend. Then I'm a little more flexible with came from extremes. Simply because we've had an established trend, so we don't have any reason to believe that the trend won't continue for at least us hitting our profit target. Susanna asked, if price touches the trigger, why don't we long at the trigger price? So I take it you're asking if our bar comes down here and touches our orange trigger line, why don't we enter at this price, assuming we go long? Yeah, so well, that's because the way these bars are designed. I mean, while it may seem that they will touch the trigger price and go up, um, keep in mind these are rather large bars. They're 41 tick bars, so there's a lot of room for back and forth in these bars, and that's really what they're designed to do. We want to let the buyers and sellers work out their differences in this tail as that forms, and you'll often see it go back and forth, especially as the market's been kind of slow um, for about the last month and a half. I mean, since mid-July, it seems like there haven't been a ton of really, really great days. So it's been pretty slim pickings. We're in the same boat here. We have a couple in-house traders, uh, and you know, it's a lot of waiting. So, um, but I mean, while looking back, if we enter long here, I mean, the market could have just as easily reversed. Um, so it's not a trade setup we're going to add. Um, we might look at that in the future. We'll probably be adding some trade setups in the very near future. But we really want to wait for uh, all that back and forth to work itself out, and then hop in once we're confirmed that it is going to move back in our direction, rather than hop in here and uh, hope it continues up. We want to get that confirmation. Jeff is asking, why didn't the trade marker list the NQ trend at 918? My NQ. Yeah, so keep in mind, that the trade marker, as I was saying, goes by the strictest qualifications of the rules. So it actually checks for this yellow line to come from extremes. The NQ, a trend trade at 918. Is that Eastern time? Central time. So you're talking 1018. All right, that's okay. So we are talking about the same one. Yeah, the NQ did really take off. Unfortunately, didn't provide us with a lot of entry points. This one here, which we didn't enter here, again, because the yellow line didn't come from extremes. We just started our trend. Those are just a little more risky to me. You can certainly enter them. Les asked, can you review the momentum trade setup, please? Well, that's for Pro 9. This is TurnKey Trader. We don't really have a momentum trade for TurnKey Trader. A trend trade would probably look similar. But the momentum is specifically for Pro 9. So in the NQ, something I'd like to cover while we have this kind of situation developing is at this point, I would start planning for a bounce in the near future. I'm going to hit my red DPI price. We're probably going to reverse, and we're at very far in the extreme. So I actually want to see it come down a couple bars, and I really want to see this dip down all the way to the 25. That's where the bounces are strongest. But the way the market's been lately, I mean, just if it dips down to about the 60 or within the 60, it also, they seem pretty strong as well. So, but I can start anticipating a bounce just because I know what that pattern looks like, and it's really, you know, after a long trend, I get a turn bar, the market reverses for a bit, and then we get another turn bar, and I want to enter at the top of that turn bar, given that my other rules are qualified. And they usually will be, provided that the market didn't reverse too far. Susanna mentions, I have more luck to enter in at the trigger price in the trend, and I lower the stop instead of 40 ticks, I do 20 ticks. If that works for you, you know, if you find a trade setup that works for you, more power to you. I love hearing when people develop their own trade setups that are successful. I always advise just do your homework, look back at the markets, and don't only look for times that trade would have won. While it is helpful and you can find additional qualifiers, you really want to find situations where it would be a trade by your criteria. You know, and you don't want to kind of get wishy-washy on what you're looking for. You set your criteria, and then you go back and look for trades that qualify according to that. And when you find losing ones, you want to find or look for a pattern that can help you disqualify those while you're live trading. So, Ralph mentions, my YM chart from this morning looks considerably different from yours, especially after the 9:30 open, not just for a bar or two, but for several bars, like 15 to 20. I just never know that I can trust what is printing on my chart. I will send the screenshot later. So anytime we're looking at a turnkey trader chart, we want to make sure. So you want to right click on your chart, go to data series. We want the days to load set to 6. Session template set to default 24/5. We want to load turnkey trader bars and use the turnkey trader complete template. And that should have you lining up pretty well with mine. There are usually, I mean, there can be, not usually, some data feed differences. We've had it on 2 charts here in the office before, in the same room. Happens sometimes. If that's the case, you suspect some data might be incorrect, you can right-click on your chart, come to reload all historical data, and that should reset any data inconsistencies you might see. Jeff is asking, what does the green-red outline on the current forming bar represent, and what is the significance of the outline touching, not touching the horizontal DPI? So this is what we call the signal indicator. It is just an additional indicator around the bar that can kind of give us a heads up. This is the yellow line is the midpoint between the white and trigger line. So that'll kind of give us a heads up. And we actually need to see all of our trades touch the orange line. That's what I look for, so I don't even really start looking out for a trade until it touches the orange trigger line, because our trend trades have to touch the orange trigger line, and our bracket bounce or counter trades are reversal trades, so they will cross through the orange line anyhow. So after we reach the midpoint, after the bar touches our gold triangle here, which is our midpoint, as we move farther down, you may see a gray arrow appear, and that will be the lowest point or highest point if we're going the opposite direction that that bar has reached. And then within the last 10% of the body of the bar is when we get either a reversal or trend notification. That's where you'll see a red triangle pop up on the short side. Depending on your direction, may say check for reversals. In this case, it would if we reversed all the way. It doesn't look for other rules. It just looks for the bar to be a certain percentage completed before it notifies you. So in case you aren't paying attention to that chart and you see that, you can kind of quickly qualify a trade setup. And if we're going long, and we get close to the top of the bar, you'll see a green triangle that would say check for trend trades. So now it does serve an additional function, which is very handy. If you notice, there's a little gap here at the bottom of this bar. If I can draw everyone's attention here. This is basically a threshold for our bracket ribbon down here. If our bar extends beyond this threshold here, that will tell us if there's going to be a black dot in our ribbon, or our bracket, sorry. So if we're watching for a trend trade, like in this case on the YM here, if this bar comes down, touches my orange trigger line, fantastic, then it keeps going down. As soon as it crosses this edge, that will immediately disqualify our trend trade. We don't care about that for the bounce, only for the trend trade. So it does give us a heads up if we'll see a black dot in the middle panel there. Alan asks, when you say you like to see trades when the direction ribbon starts at 60, how far can the 60 be from the place where you enter the trade? That is an excellent question. And the answer is it doesn't really matter. The only thing I care about is that, and due to the way these bars move, because they are one-tick bars, so in the direction of the trend, it only takes a tick to plot a new bar from the DPI of the last one. So I really only care that it came from an extreme when it was at whatever that highest level was previously. So in this case, once I see this market reverse and I'm gearing up to identify a bounce trade, I just make a mental note. I reached an extreme here. So that satisfies that requirement for me. And then I want to watch this yellow line come down, and I really want to see it bounce off the 25 or somewhere in between 25 and 0. That's the real sweet spot for the bounces, and really illustrates the pattern well. We have this reversal, we'll come down, maybe we can see a few more bars, and then if we reverse again, we'll be set up for a pretty prime bounce trade. And this yellow line will kind of follow the pattern of the bars. We come from an extreme, you'll see it just dip down here, kind of like a really wide horseshoe, and skip off. Usually it skips off right off the 25 or dips down in here. But once you see that pattern, then it becomes really easy to identify it. So I really like to see these come from extremes, especially when the market isn't trending as consistently. In this case of the NQ, since we have such a strong trend, I would probably be a little more lax with my rules. Like, I don't really need to see it come all the way down to the 25. If I'm going to trade extremely conservatively, I would wait for that. But we have such a long trend established that seeing this yellow line, even in this range, is still, I mean, it is above zero, does qualify. But during some slower times or when the markets are a bit more choppy, I'll qualify the trades more strictly, um, just to be more cautious. So I guess the simplest way to answer your question, Alan, would be the most previous highest or lowest point the yellow line reached before I'm looking to qualify a trade. Ralph mentions I did check your charts a couple back. All right, yeah, we'll go ahead and send a screenshot. I'll go ahead and take a look at that, see if we can't get you squared away. All right, you're very welcome, Alan. So unfortunately, not a ton has been cooking up. Like I said, very, very slim pickings. Just you know, the markets have been cycling such that it really hasn't been giving us a lot of opportunities. It seems to go long enough just to establish a trend and then reverse, and our bounces just go, or when I'm looking for a bounce, it kind of reverses far enough. And the yellow line just gets below the zero line and then reverses, so I don't really have a setup there. So it's been that kind of week, which I know can be like watching paint dry, but I like to look at it like this, is that the goal of this system is to really not overtrade. It's very slow and steady when the rate wins the race. When the markets are behaving like this, we aren't going to see a ton of trade setups or have really optimal entry points, which was frustrating for me at first as well. But I like to think about it this way, is that we get paid for waiting. We're not entering into risky situations, opening up ourselves to unnecessary risk. So, you know, not putting ourselves in risky situations where we may open ourselves up to a loss is a win in my book. That's, you know, something we don't have to try to make up for. So while it is a bit boring sometimes when the markets are slow as molasses, you know, I would just spend that time doing some additional back testing or looking, you know, for any patterns or additional disqualifiers or qualifiers I can look at. I do want to point out this is what I would consider chop with turnkey trader. I like to call this pattern the zipper. We see our long bars just building up and down, and this started, you know, last night, and then continued through the day here on the Russell. So we just kind of get these bars going back and forth, back and forth. So this, which isn't going to be a trend because my yellow line is within the 0 and 25. And also the yellow line here just going back and forth in this right around the 0 line. So this is a strong sign to just sit out of this market for until we see some good trends established. So, you know, pretty straightforward. We just want to see really clear trends. And even our bounces are similar to a kind of continuation almost. We're still continuing the trend after a little bit of a reversal. So in this NQ prime bounce setup here, if it reverses. So if it doesn't, you know, we'll just continue short and have to wait for an opportunity. And this has been, you know, I've seen this happen quite a few times this week, which is really unfortunate. It's a bit irritating sometimes. Looks like we're going to have a prime setup, and then the market just continues short and doesn't really set up for anything. And then when we get a nice short trend established, it reverses again. Same story on the upside. So Davin mentions, I don't have all the dash lines you have on your lower panels. Is that from a new update? Not yet. I added these for the class so I can clearly illustrate these lines as I do. I've added them. I find them to be important just to identify visually. We will add them in the next update. Just add them to the template. If you want to add them now, it's a standard indicator in NinjaTrader. I added a constant line indicator. So you can add the constant line indicator, and there's actually 4 different values you can set. So I did 100, negative 100, 60, negative 60, and then down here under the plots you can change the settings. So I made them the same color on both sides so I can differentiate the 100s from the 60s. So Susanna mentions this week 4-day win, 1-day loss, total profit 570 sim account. That's pretty decent for how this week's been going. There haven't been a ton of trade opportunities, unfortunately, and even the good trades we get, seems like after we hit the profit target, there's a bit of pullback that stops us out of break even. I've even adjusted my stop to break even -2. And I still find that I get stopped out with that. So Jeff's asking for the Pro 9 class. I can make sure you get an invite to that. No, because we've been restructuring our websites and trying to consolidate them, I haven't posted those on there yet. But we are looking for a good page to post them to. But I'll make sure you get the link after this class. Davin is asking to explain the 60 and 100. I just marked the 100 because it's the start of an extreme. This lets me know when my yellow line down here reached an extreme, which would be between 100 and this 120 up here. And I just have the 60 on here. I find it's a pretty good sweet spot for the trend trades. I like to know when I'm in between the 60 and 100. So, and then same on the reverse side, the negative 60 and negative 100 are just for the short trades. So. All right, Ed is asking about the EMD. Let's take a look. So I don't actually have live data in here. Yeah, this doesn't really strike me as a trade setup because I had a reversal. I mean, I guess it technically could be a bounce. But again, with the bounces, I mean, it does technically qualify by the rules of a bounce, but it's not really what I would like to see for a bounce trade. I want to see that same pattern that we saw in the NQ. Yellow line coming from at least 100, dipping down around the 25, in between 0 and 25, unless there's a really strong trend established already, which we haven't had in the EMD. So we may enter a continue or add a continuation type trade. This would, to me, would be like a continuation type. We may add that in the future. All right. Kwong is asking, is it too late to enter the trade when the turnkey chart plots bounce bracket and trend trade? Typically it will be, because the way that trade marker works is that some of these indicators cannot be calculated live. So we have to look at the previous value. Given that that's the case, the trade marker will almost always plot the trade or the information on the chart after that bar closes. So we added it more as an educational tool. To help just confirm while you're looking for the trades, and that after that bar closes. There will certainly be some different cases where you may enter a trade and it doesn't plot, even though it's qualified, and that is because that it has a very strict set of rules that it looks for. It's very conservative. So sometimes you will be able to get a retracement if you're waiting for that, but I wouldn't make that a habit or the way you rely to identify trades on this chart. It would just be to look at the patterns. And I do think, once you get a hang of the rules, I don't really need to see a checklist of the rules. Once I got them down, you just kind of familiarize yourself with the pattern. And this bounce is usually pretty clear. And this is a prime example. Ralph mentions, I don't fully understand what the purpose of the bracket is, this middle bracket panel. Or extrapolating from the rules alone why a bracket trade is called a bracket trade. Could you elaborate on that? Yeah, those setups are simply when the bracket agrees with everything else. So it's another way for us to confirm the momentum of the market, basically. So we aren't looking for a bracket trade when this disagrees with our current trend. So everything's really lined up for a long trade, yet our bracket is red here. So it does give us a possibility that we could simply continue short. But we still want to be, but because we don't really consider this for the bounce trade, we still want to be on the lookout for that bounce. But again, we don't have to really consider that until this bar reaches this midpoint, because we have to see a cross here anyhow. And we're not going to enter till up here on our green DPI. So we do likely have a bit of time if indeed the market continues long. So another way to think of it, yep, see now we just reversed just far enough for a yellow line to get below zero. Another way to look at the bracket is kind of when the long, or when that trend has run out of steam. So we have this really nice long trend. Everything agrees. Our bracket runs out of steam here, then continues back long a bit, and then we get another red section letting us know we may reverse for a bit. Al is asking, what does the EMD pay per point and tick? So the EMD would be $10 per tick, which would translate to $100 per point. This is 10 ticks per point. Kwong is asking, are you working to convert turnkey trader to an auto trader? No, we don't plan on doing that. Plus, it's a bit more difficult just due to the way that some of the indicators don't plot live, so it's much harder with this system to try to turn it into an auto trader. Ed mentions he entered the EMD trade in Sim and hit his first profit target. So I guess it did turn out that was a bracket trade. And then Ed also asked, or that was Carl, on your EMD chart, it plotted bracket with E and an entry price and then S. That is the trade marker, so it will mark a qualified trade. Again, it's more of a training tool rather than a heads up, or it's not going to tell you an entry ahead of time. So it is a way to kind of confirm that you are identifying the trades correctly. And it does give you the entry price, which will just be the DPI. If you're heading long, that'll be the green DPI, and S would be the stop, which should be the opposite DPI. Yeah, so just asking, this is a great question. So with NQ right now and the yellow is less than 0, that's telling us it's not a bounce trade. Do we then start watching for a different type of trade setup? Yeah, so once this crosses and is below the 0 line, then we're no longer going to see it as a qualified bounce, because one of the rules is that our 0 line has to be above 0. And would like to see it between 0 and 25 most of the time. Not always required, kind of depending on how long the trend has been running. But once it crosses that, then we're just out of the game for a bounce trade, and we kind of have to watch for different setups. But in this case, since the market has to reverse, we either want to see it continue long again and then set up for like a trend trade, or it's got to continue short long enough to establish a short trend and possibly give us a trend trade in the short direction. So unfortunately, this has kind of just been happening a lot this week. I've seen this setup where we're looking for a prime bounce trade, and then we go too long, and now we're in pretty much no trade territory. We're not going to see anything in the immediate future on the NQ. I thought there were some I wanted to check out on the short. We had kind of a, not quite a bracket here. Have a couple trend trades. Which that one would have been pretty decent because we ride over here because our stop is quite wide. So we don't have to worry. And that's so we can take a lot of heat. I was taking some trades yesterday. And it took a while to hit my profit target because the market was so slow. I was actually experimenting with this type of continuation off the 200, just doing some tests. And this trade took, let's see, this bar closed at 2. Yeah, so this trade took an hour and a half to hit profit target. And James mentions not just this week. Yeah, the markets have been kind of like this, most of August, and August is typically slow anyhow. Um, so that's not out of the ordinary. Um, but I would usually expect it to pick up by now, but it hasn't been. So, um, which is fine. I mean, obviously, I would like to see some more trade setups throughout the day, but we can't really influence the markets that much. So we kind of just have to bide our time, um, and wait for the prime setups. And that's really what we do with the system. Um, we're not into the business of over trading, because the goal really is to, catch something like this. We get our trend trade entry here. My yellow line is, you know, pretty bloated, not quite to the 120. We've had you know, this short trend's pretty established. Um, so we want to try to catch a move like this. Um, and that's why we wait for these very specific trade setups, and why I recommend starting with that, the 20 tick, instead of just leaving a runner in. I like to go for just 20 ticks. I think that's a good way to start. That gets you 5 points in the NQ, or 2 points in the EMD, or whatever market you're trading. But 20 ticks is a pretty good profit target. And I really like that for how the markets are currently, where they're not really giving us these really long runs. So I feel like shooting for 20 ticks is still a good profit target, and I feel like we have more of or better odds to hit that 20 ticks than to get to the point where we start trailing at the white line and that goes past 20 points to make it worth it. So this would be an exception, but this goes in to, I mean, this is pretty far after market closes anyhow. So Kevin is asking about gold. So gold is also a market I've just been in. Recently checking out just to look at other markets. I mean, when the main markets I watch are slow, I'll definitely venture out and take a look at some other markets to see if they're providing some good opportunities. So yeah, this would be a decent trend. The only thing that worries me is that my yellow line didn't come from um, an extreme, really. We came up, this is almost a bounce. Unfortunately, this just went just above the zero. Did come from an extreme here, was prime other than that. And I'd really have to take a closer look at gold to see. I'd just like to see how this type of situation works out. Even though we do have a pretty established trend, I'm not sure how far gold moves. So it's a market I need to spend a little more time with. Davin asks, exit all contracts at 20 ticks. No, we're going to take 2 contracts off at 6 tick profit target, and then adjust the stop on our runner to break even, or our third contract. If you want to leave it in as a runner, I recommend you can either trail at the white line, which gives you a pretty tight trailer, still gives you a bit of breathing room, or you can trail at the orange line, which is actually what I like to do. what gives me just a bit of a wider stop to right over any of these wicks. Typically, they'll come up to just under the orange line. We're getting a lot of pullback here. Or with the method with waiting for 20 ticks, I just leave it at break even until I hit that 20 ticks. And then it jumps out. So you may want to trail differently. But if you're going to do a true runner, rather than just look for the second profit target of 20 ticks, either the white line or orange line is an effective trailing stop. But you do want to wait until that price is better than break even, because we don't want to give up some of our profit. And that's the very baseline conservative approach. I know people alter their money management strategies. And when we enter these trades, typically they'll take off. Not recently, however, the markets have been kind of slow, so I've adjusted my break-even stop to break-even -2. So if you're comfortable with just kind of giving up risking 2 ticks of the profit, so you'd be taking 10 ticks off your first 2 contracts rather than the full 12, because you'd be risking that extra 2 ticks. But it does give your runner a little bit of breathing room in case there is a bit of retracement back to your entry price, which has seemed to be happening quite a bit recently, especially in the NQ. It's happened to me quite a few times in the past month or so, where I'll hit profit target, get a really fast retracement, and it comes back and nicks my stop at break even and then runs. So that extra 2 ticks might be something you want to experiment with. Jeff is requesting, could you post a video on how to set up a stop strategy using the white and gold line as a trailer? Yeah, I'm actually working on adding those videos for the ATM, so hopefully I should be able to get those up later this afternoon, so you guys can check those out over the weekend, which is, something I really like about TurnKey Trader, is that there's room for flexibility and customization once you get a handle on the foundation of the rules. You can decide if you like to trail, which different trailing strategy you like, or if you want to go for 20 ticks, that type of thing. And then each market I feel, is a little more unique. And by watching one market and really learning that market, you can learn, maybe I don't need to watch, or for the bounce trade, I noticed that, in this market, as long as the yellow line comes under 60, that seems to be a really strong signal. So there are, depending on how long the trends run, and on that particular market, there can be additional qualifiers we can look for that can help us better qualify these trades. Davin mentions, I thought I was the only one that happened to. Nope, these markets have been pretty difficult to trade, if I'm going to be honest. We haven't been having an easy go of it either, so it's been, like I said, just very few and far between entries, and even those entries, it seems like they do hit profit target and then they just get stopped out. And there's not much we can do about it. We can't control the markets, so we just have to remain diligent, take our qualified entries when they appear, be a little more cautious when the markets are like this. I know I am, just because they seem kind of hairy sometimes, and they don't always do what I would expect. So I am more strict especially when the markets are very slow moving, and they just kind of plod on, and it takes an hour to hit a profit target. I know no one likes to sit there and white knuckle a trade for an hour, but this week I've sat in several trades that have taken over an hour just to hit my profit target. So I like to look at it as kind of a Ron Popeil, set it and forget it, you know. Now, it has happened quite a bit in the NQ specifically is where I've been seeing it, where we get a lot of action as soon as a trade qualifies, and um, just a lot of back and forth action, and it'll hit your 6 ticks, retrace real quick, and then take off. So may want to experiment with a break-even -2 for the runner. It doesn't always work out, of course, so you might give up those 2 ticks, but we've already hit our profit target, so we're just deciding to kind of take less of a profit off of our initial 2 contracts, just to give us a little bit of extra wiggle room, and hopefully we can hop in on that runner. So Kevin asks, do we ever trade the ES? I don't particularly. It doesn't seem to move a ton. It might be one of those markets you want to leave up in the background. And the thing about it is that when it does, I mean, it doesn't move a ton each day, but it does seem to move in a direction consistently. So it might be something you just want to keep up on the side or on a side monitor if you have multiple monitors, and just keep an eye on it. But it certainly does not produce a trade setup every day. So it's not really one we watch with Turnkey Trader. Davin asks, what markets do you trade? I focus mainly on the NQ and EMD with this. RTY, now that it's starting to pick up a lot of volume, has been doing pretty well as well. YM's been trending consistently, but it does seem to move in a direction consistently. It's just very slow moving lately, it seems. So typically I would like the YM. It's something I like to keep an eye on. I actually also like the FDAX, but you do have to be a bit more cautious in the FDAX because that market can get pretty squirrely sometimes if you're not careful. You really have to be cautious of chop and really pay attention to the way it's cycling. Davin mentions, I found the EMD has a spread that is too wide. Yeah, I do hear that a lot. It is a bit of a lower volume market. So, the way I look at it is it's a market, if you plan on trading it, you really have to actively watch it and really be involved in watching your entries and stops and that type of thing. So it's not a market I would necessarily just enter a trade. I won't just let the ATM handle the trade for me in the EMD. I mean, I will let it manage the trade, of course, but I'm going to watch it actively. So, I don't really have too much of an issue. I mean, there is slippage sometimes, or I just don't get filled, that type of thing. And that just goes with the territory. I mean, it's no different with us. So, all right, I'm going to do a couple last questions, and then I got one more question from Alan, and then I have to cut it off. So real quick, Jeff mentions plus FDAX data fees are high, not to mention they're $12.50 a tick. Yeah, so it is. I mean, it's not a market to jump into willy-nilly. I do know some people like to trade it. It is open early in the morning Eastern time. So if you do, just be a bit more cautious and really study the market a bit before you dive right in. Alan asks, on the other Pro9 charts, I get stopped out often when I go to break even after hitting my profit target. So if I like the angle of the moving averages, I put on one contract to get the runner back. That has made me some money. What do you think? That's actually a pretty good idea. I like that. So you just hop in if you get stopped out. with one contract. Yeah, that's a pretty good idea. I've actually never done that, but I do like that. I might have to experiment with that. Also, I know some people adjust their stops with uh, the runner as well to kind of give you a little bit more wiggle room. In that same manner, going to like break even minus a tick or two. Uh, so I have heard that quite a bit from members. So, all right, everyone. Thank you for joining me. I do have to cut it off and head to another training. So I will post this recording later this afternoon on the members, Turnkey Trader members area. All right, you guys are very welcome. Again, thank you everyone for joining me. Hope you were able to learn a bit more than we knew coming in. And hope everyone has a wonderful rest of the day. Hope the trading day treats you well. And everyone has a wonderful weekend. And until next week, happy trading.